Hey everyone, Chris Johnson with Money Morning, and I've got Mark LoPresti with me again today. We're talking the nuclear AI trade, companies like Oklo, NuScale Energy, Nanonuclear Energy. They're all on the table. We're doing a deep dive, and we're going to give you some great information on the sector. And I'm going to close things down with not only an idea on how you can build a diversified portfolio on the sector, but everybody's been asking for a long-term call option strategy on one of these companies. I've got a leap strategy using the 2027 calls on Oklo. We're going to go through the details on that, as well as the hypothetical comparisons to what you return on a leap versus the underlying stock, Oklo in this case. Stick with me. It's 10-15 minutes. You're going to learn something new and be a better investor in the end. Let's get into it. Let's throw that aside for a second, because one area of the market that did take off, and it's in the mid cap. Some of these companies are small, or even micro, we'll call them. But when you look at the SMRs, those nuclear, the small modular reactor companies, you and I talked about this the last time that we got together, and we both agreed this is one of those areas. AI is just going to be dominant in terms of energy. You know what? I've not stopped saying thank you and please to ChatGPT yet, per your request. But
come on, man. Come on.
Well, now that I own some of these SMR stocks, I have to, spend as much energy as possible. But nonetheless, they took off. Oklo, SMR, nanonuclear energy. What happened here? And is this a point where you wait for prices to come back down, or is this just hold on for the ride?
Well, so why don't we start with the last question first? If you were already in, hold on. If you're not in, buy on pullbacks. If you're in and you want to add to your positions, buy on pullbacks. These are volatile names, okay? When they go up big time, crazy, like Oklo on the news that they broke ground on their first reactor. This is really, really big news. It's really important. But when the market sells off, it's like we said earlier, when we get a risk-off day, and we have had risk-off days, what goes first? This kind of stuff goes first. The risk stuff, the stuff that's been up 30, 40, 50, 100. If you were in it as long as some of the people that are in the market, Rebellion, Rebel Nation, we put a research report out on this sector, as you know, CJ, in December of last year. We just hosted a 10X Rebel boot camp here in Miami, Florida over the weekend. I had one of our customers come up and tell me, and that research report was absolutely free, by the way, came up and told me, said, I couldn't afford my daughter's wedding until I got that research report. I picked her 4 favorite stocks. I invested in that portfolio, and she had a fabulous, I don't want to say how much she spent on the wedding, but it was a lot. And gave me a big hug for that. That's why we do what we do. I absolutely love it. So look, can this stuff go higher? Will it go higher? Yes. Catalyzed by that a voracious and insatiable demand for energy that's being created by the data centers. Everybody was saying in the spring or even in the early summer, oh my God, there's an AI bubble. These things can't go higher. NVIDIA can't go higher. The chip makers can't go higher. The data centers builders can't go higher. I said wrong. They were wrong. We were right. And we saw how that party has continued. And it is because of the amount of data that we use, the amount of use of AI that generates all that data, and that need for compute. All that is need for electricity, and a lot of it. We also see, of course, the government through the President's Manhattan Project and other efforts, including direct foreign investment into the sector, more data centers, more AI factories, manufacturing facilities here in the United States. That's not going to stop, CJ. It's not going to stop. Now, the thing specific to the SMR space is a couple of things. One, they are advancing towards commercialization because none of these companies actually have an SMR out in the field, plugged into the grid and producing energy. These things are not at, as we say, commercial scale yet, but they're getting closer, faster than we had anticipated, even when I wrote that research report 4 or 5 months ago. And secondarily, and this, of course, is a theme with President Trump and this administration across many industries, a significant and substantial reduction in regulatory burden and roadblocks towards the implementation of this technology. We saw an executive order, I think it was in April or May, demanding that the Energy Agency reduce the time for permitting, reduce the application red tape, reduce the amount of time it takes to get not only small modular, but even a larger scale traditional reactors back online, because this administration recognizes we need more power and we need it now.
Is this their replacement for coal?
No.
This has been the administration that said, let's, drill, baby, drill.
Yep.
Go after coal.
Yep.
You saw Consol Energy, or the old Consol Energy, take off and go through the roof after the election, and a couple of other coal companies. Is this just an enhancement, or is this really maybe us going to the next level now, and coal's going to be still something of a memory?
Well, listen, here's the deal. No one energy source, okay? Coal, nat gas, nuclear, solar, wind, no one energy source is the solution to this problem because of the quantum demand of energy, okay? So it's everything. It's all of those energy sources. And yes, of course, the president's reduction in maybe some of the environmental restrictions around things like coal and even additional drilling and exploration for oil and gas, I think will also lead. But all of those energy sources have to be part of the party and at the table to help fulfill the energy demand.
I'm going to opine a little bit here on Oklo, because not only have they dug ground, but they are now going somewhere that's different. The announcement last week also that they're going to be more or less reclaiming, let's call it, recycling some of these pellets.
Yeah.
It was an interesting story, and it's something that we haven't seen from anyone else. And I thought it was interesting that 90% of one of these pellets, the actual energy that they can generate, is thrown away, for lack of a better word. And Oklo is the first one to say, we're going to go back and reuse that and really get everything we can out of those pellets. Are they the company to watch in this space now?
Yeah, I mean, sir, they are probably the fan favorite, CJ. I mean, we like all of them. We were early, just in full disclosure, we were early in NNE Nano. We had done deals with one of the founders previously in the family office side of our business. So we like that one too. We like what they're doing. We like SMR. I like all of them. Certainly the outperformer has been OKLO. I expect that to continue, but we're allocated in one portfolio another in just about all of these guys. And I'm glad you brought up the pellet recycling, because it actually leads to another thing, and I want the audience to be aware of and start looking at. If you feel like you're late to the game in the SMR and the nuclear space, which, by the way, you're not, as long as you buy on dips and you buy on corrections, but you want to know what the next phase of the technology development is in and around that, it's the uranium side of things, CJ, okay? We don't have access to enough uranium, number one, and even if we did, we do not have enough ability and capacity to enrich that uranium, which is, of course, the feedstock for reactors large and small. There's a few names we're looking at in that space. I'm going to save them for a future podcast, so we create a little FOMO here for the audience.
All right, some great information from Mark. I was happy to have him with me. I'm going to take the next leg of the conversation, though, and start to talk about how you invest in the nuclear AI industry. This is a group that a lot of people feel like they have missed the ball on. I'm telling you, we're only the second, maybe third inning in this 9-game ball game, though. So pay attention. There's a lot of opportunity here. What you got in front of you is a list of the companies that we've talked about, plus a couple of others, and their one-year returns. I've also put their market cap here on the side. Obviously, GE Vernova is one of those stands out in terms of the market capitalization. And then you've got Constellation Energy, Duke Energy. These are your slower down here at the bottom, and you're going to see how I use these myself in diversifying a portfolio. But these are your slower movers and the companies that are going to pay you a dividend. Keep in mind, with interest rates going lower, investors are going to be looking for a dividend. So a Constellation, a Duke Energy, an AEP, those are the kind of names that are not only going to get flow from the nuclear AI industry, but also investors interested in looking for cash flow coming from their investments. That's why these three are on there as well. How do you approach it? Do you go out and buy Oklo? You could do whatever you like, and whatever I talk about here is not an actual piece of investment advice. I always like to say that. You'll see disclaimers all over what we talk about. I am long the nuclear AI companies and ETF, Oklo, AEP, Constellation. You get the picture. I'm long these names, but how do you put together a strategy that's fit for investors? And we talk about diversification quite a bit, and that is the name of the game here. Remember, you've got names like Oklo that are up more than 1,000%. These stocks are going through the roof. There's a lot of FOMO, and it's going to continue to drive them higher, but You want to use a balanced approach when you're in a space like this. Volatility is the name of the game that you're going to see on a regular basis. And I always tell people, make sure you balance yourself out. Get a diversified portfolio together. And when I talk about a portfolio, this is not your entire portfolio. This is a small piece of it. It's up to you what you want to do. And make sure you talk to an advisor if you have one. Get that education as well. But a balanced approach of using an exchange traded fund, an ETF. If you don't know what an ETF is, it's a basket of stocks. Normally, it's going to be the S&P 500 or the NASDAQ 100. In this case, you can buy a nuclear ETF, and that's one of the approaches that I start to use. Add exposure to larger names in the industry for some alpha. I've got that right there. And then go after your moonshot. So you can see a foundation approach with the ETF, and then you get some alpha from those larger companies. Constellation, I'm looking in your direction. And then you start to add in some Oklo, some NuScale energy, some nanonuclear energy, etc. You may want to use some long-term leaps options, and I've got a great example here in just a second. So everybody that's been pining for one of those, I've got it for you, as well as what this option would do. Here's an idea of the nuclear portfolio that I've put together for a few people, myself included, and it, again, takes that balanced approach. You'll notice that 35% of that is in the NLR. That is a nuclear ETF. Take a look at it. Keep in mind when you start talking about ETFs, you're talking about management fees. They tend to be a little bit lower than they were 10, 15, 20 years ago. Nonetheless, you want to make sure because they are actively managed in some cases. And then I start to add pieces of that alpha on top of that foundation. There's my foundation. Constellation Energy Group at 15%, Duke at 10%, and then I get into some of those moonshots. Now, keep in mind that when we're talking about the nuclear AI industry, it is an old industry when we think about it, but it is very new in terms of the new nuclear technology that's coming along. These are stocks that are going to double and triple the volatility measures that you see on the NASDAQ 100 or the S&P 500. You have to be looking out on the horizon when you talk about those. And in that moonshot, let's call it, portion of the portfolio, you can see I've got 4 companies, everybody from GE Vernova, Nanonuclear Energy, NuScale Energy, and then there is that Oklo. I take the easy approach usually, and I just split up that moonshot portion of the portfolio, and I split it evenly among those companies. If I have 6, I'm going to drop that down, the allocations down. Again, adjust this idea for your investment style. This is not the word, if you will, on how to invest in nuclear, just a little bit of guidance. What I really want to get to, though, and this is, again, a simplified approach. You can use it with any industry. Doesn't matter whether it's quantum computing. Yeah, there's a quantum ETF. I'll talk about it in 4 or 5 days with that quantum computing interview as well. But with an ETF, you also want to follow up with adding some of those stocks to the portfolio. Allow those stocks to run and simply rebalance every once in a while. It's an easy approach. Getting outside of that, though, everybody's been asking me about how they can invest in a long-term option. What we're talking about are leap options here. And I do personally have leaps on Oklo. I've already purchased them a long time ago. I'm going to give you an example of how you can trade Oklo with a 2027 leap right now, which is the same expiration that I own, a January 15, 2027. But I'm going to give you the actual details for one that you could buy now and what those returns would look like. What is it? It's a long-dated call option that allows investors to diversify their portfolio as they require less capital to control 100 shares. If you're not familiar with options, go to the OIC, go someplace and get the options education. But one of the big things that the options industry did a long time ago is they took those short expiration options. People think about 3 days or a month or maybe even those 0-day to expiration options, and they invest in that. That's not the style that you want to play here. Remember that volatility that I talk about, that's going to turn into your enemy very quickly if you're trading options that expire in a couple of weeks. You see a 20% down day or down move like we've seen here recently with these companies, and all of a sudden your profits are gone. And maybe it's out of the money, and that money's gone after expiration. What I'm talking about is something that's much longer in that expiration. We're going out to January 15th of 2027. And with one option, one of those options, which is what you'll see with the numbers here, I can control 100 shares of Oklo. And what I mean by that is at any point when this option is in the money, I can exercise it and be delivered 100 shares of Oklo at the strike price that I've decided to buy. That strike price today that I'm using for an example is $120. So if the price of Oklo is at $200, I can go to the options market and say, hey, I'd like to exercise this. Somebody has to give me 100 shares of Oklo for $120, even though it's trading for $200 in the free markets at that time. So that's how an option works, and that's why I love the LEAP options. There are put options that goes with this. I'm talking about calls at this point. The strategy, by using a smaller dollar amount to control 100 shares, it can allow you to leverage a portfolio with smaller investments than you would if you were going out and buying those 100 shares. You're going to see the leverage in just a second. Risk control measures should still be implemented. We're talking about an option that expires in more than a year. So if for some reason the market goes into a bear market, you'll want to make certain that you are implementing some sort of risk control on these type of investments. I use long-term technical trend lines that are applied to the underlying Oklo in this case. If it breaks down below its 200-day moving average, or if it breaks down below certainly its 10-month moving average, that's the point at which I say I have to come back and pick up these options again at some point when the market and Oklo are back into bull mode. Right now, we're in a full long-term bull market with Oklo shares. I don't think that we're going to run out of that bull market, even if we run into problems with some of the large cap technology. Let's look at that example real quickly, and this is where I love to talk about leaps and what they can do. So I have pulled the data that is live as of today. This is the 29th of September. In terms of buying, what I am looking at, which is a January 15th, 2027 expiration, Oklo $120 call. Now, I'm going to compare this against the cost of buying 100 shares of Oklo because, again, that one option gives me control of 100 shares. I have the right to buy those 100 shares. Real quickly, let's just go through all of those bottom lines. My price target, $200 to $250 for Oklo. I think it's going to go higher than that here over the next year and a half before we hit that January 15th year and a quarter here. But if we're at that $200 price target on January 15th, 2027, this particular option is going to be up 74% on intrinsic value. There's no theoreticals. There's nothing like this. This is the last minute of trading on the 15th of January. I've made 74%, and look, you made 70% on Oklo. The difference being I put $4,600 in, and an investor buying 100 shares puts almost $12,000 in. That's standard. I'm buying slightly out of the money with that $120 call, and it's going to perform around what the stock performs at this particular point. And there's all kinds of things that go into that price, that $4,600, implied volatility, risk-free rates, all of these things. But just know, using intrinsic value, which is what the option would be worth, everything else out the window, I'd be up 74% against the 70%. Here's where it gets better. We go down and say July 31st of 2026. What happens if Oklo's at $200 at that first price target by July? So well before the expiration, about 6 months before the expiration of that option. Well, my option now is going to outperform Oklo because little convexity that's going on with it. I get just a little less than 100% compared to the 70% that we get from Oklo shares. So again, same price target. It's up to that 200. You're going to get the 70%. But now I'm starting to see how that long-term option plays out. And the reason that's worth more is because there's something called time value that is still available in this option. With 6 months left to expiration, we're already above that price target. This option, I've got time to let it breathe, is what I normally say, and that time is worth something. And in this case, it's the difference between that 70% and that 98%. You can see the $9,129 is what that contract would be worth. This is using, for those of you that want to question it or ask, this is using the Black-Scholes option model pricing. So it's straight from Black-Scholes. Now, This is where it gets even more interesting. Let's say that Oklo acts the way it has over the last year, and this stock is just on a tear again. A $250 price target, and let's use that same July 31st date. So it's moved up faster than we've already hypothetically or modeled for. It's moving faster, and it's done it faster. Shorter period of time and a larger gain in the stock. And it reflects it very well in that bottom line on that option. Same date, the July 31st, but add that extra $50, which is obviously 25% more. Not out of the question by any measure for Oklo. And now this option's up $197. Let's call it $200 because it's not even a horseshoes and hand grenade situation. It's 200% return, and that stock now at $25,000 for my 100 shares is a 112% return. That parabolic difference keeps getting even more parabolic if the stock continues to go higher on that July 31st. A great little breakdown of what you can expect in terms of playing the long-term option versus playing the stock. A lower amount of money that I put in as my initial investment into it than I would buying the shares. And I'll be frank, I typically will go, it all depends on the amount of money that I want to put in. But if I were originally looking to put in $12,000, I would end up buying 3 of these calls, these long-term options. And obviously the returns would stay the same, but the actual capital would be different. So a very flexible tool. This is one of the ways that I think investors should kind of wake up and say, should I be trading options? This is one of the easiest and the most manageable way of trading options using these long-term calls or puts. And in this case on Oklo, I think it's a slam dunk in terms of leveraging and allowing this trend to play out to the upside. That's it. It's as easy as that. You can rewind and watch that little breakdown of it. I hope you do. And again, these were using prices from the 29th of September, and the hypothetical pricing is using the Black-Scholes option pricing model with everything kind of held constant except the days to expiration and the stock prices at that point. That's it for you. I hope you come back. Make sure you click on that QR code over and over and get that AI nuclear portfolio and that AI nuclear report. It is free of charge. I'll have Mark on again to talk about quantum computing soon. I look forward to the next time. Make sure you check us out at moneymorning.com as well. Chris Johnson with Money Morning, wishing you the best trading success. Have a great day.